time to do business again. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversation right here on Business Morning. I'm Ini John McWan. As usual, we'll start our business from the global oil space. Prices rebounded slightly today after plunging in the previous session on concerns of Middle Eastern supply. That remains at risk as a diplomatic resolution to the US-Iran war that has disrupted shipments still seems unlikely. Front month Brent futures, we saw that increase earlier today, 1.35% to $84.89 a barrel. WTI is also up 0.68% to $80.87 a barrel. And of course, we've seen that response from Iran denying the fact that perhaps there's any hope of talks between the United States and Tehran towards bringing a lasting peace to all those the Strait of Hormuz and surrounding issues. However, on Monday, Iran's foreign minister they rejected Mr. Trump's claim, saying no negotiations with the United States were taking place and no meetings have been scheduled so far. And then to other stories, to the market. First of all, we see how the market closed yesterday, the NGX. We saw the all-share index rebound 0.18% at 245,730.53. Equity cap also, we saw that increase, added about 388 billion naira at the close of trade. Volume and value, however, closed in the red, while deals were the only ones that increased compared to the close on Friday. And we saw top gainers, so activity charts yesterday, mostly red, just the deals, and then top gainers had Eternal, Coverton, and Omatech, and the top losers had ETI, Cadre, and Thomas Way. Right, the top trades yesterday, we saw a lot of profit taking on Access Core. So over the weekend, some kind of unverified news, and I guess that fed into investor sentiment at the trade yesterday. So we saw a lot of profit taking, but all of that has been clarified, and we do have a certain level of certainty in the banking sector, going by the work of the Central Bank of Nigeria. We know that banks cannot just collapse just like that. Top trades also, we had Honeywell Flour and Sterling Nigeria. They made the top trades negative, positive, positive. So profit taking, cherry picking, and cherry picking. So sometimes top trades you have profit taking on it. Now, the Debt Management Office has commenced subscriptions for its August 2026 federal government savings bond program, offering the retail investors are given 2 fixed income instruments with annual returns of up to 14.963% and a minimum investment threshold of 5,000 naira. In a notice released on Monday, the Debt Office unveiled a 2-year savings bond maturing on 12 August 2028 and carrying an interest rate of 13.96% per annum, alongside a 3-year bond that's due August 12, 2029, with a coupon of 14.963% per annum. The subscription window opened August 3, that was yesterday, and will run until the 7th, while the settlement date has been fixed for 12 August. Successful subscribers will begin earning interest from the settlement date. The DMO said that each bond unit is priced at 1,000 naira, allowing investors to participate with a minimum subscription of 5,000 naira. Additional investments can be made in multiples of 1,000 naira, subject to a maximum subscription limit of 50 million naira. And the Nigeria Revenue Service, the NRS, they've released a comprehensive guideline outlining how virtual asset transactions will be taxed under Nigeria's new tax regime, providing greater clarity for participants in the country's growing digital assets industry. And the report said that the statement issued by the agency says that the framework spells out tax obligations covering registration, reporting, requirements, record keeping, and evaluation of virtual assets. It notes that the guidelines are applicable to taxpayers, virtual asset service providers, peer-to-peer marketplace operators, tax practitioners, and other participants involved in virtual asset activities. According to the NRS, the new guidelines are aimed at ensuring a consistent and transparent approach to administering tax laws within rapidly expanding virtual assets ecosystem. And yesterday was a busy day in Asaba as the summit, the Delta State Economic Summit, started. The who and who in the world of business and economy, they were there. One of those who attended the event is the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala. She identified Delta State maritime sector as a major driver of investment and job creation, asking the state to harness its coastline, seaports, and inland waterways to build a thriving blue economy. Speaking on the sideline of the Economic and Investment Summit in Asaba, WTO chief says that targeted investment in aquaculture, fish landing sites, cold storage facilities, jetties, marine logistics, and ship repair services would position the state as one of Nigeria's leading maritime business hubs while creating thousands of sustainable jobs for young people.
Well, I think Delta State is attractive because it has some special comparative advantages, okay? It has gas that can power industry. And I really think that Delta State can become the third industrial hub for the nation. After Lagos, Kano, Port Harcourt, I think you could, or the fourth, I should say, the industrial hub. It's trying to pioneer some special economic zones. The good thing about it is it has the gas that can power those zones, because without power, without electricity, you cannot have any industry. So that's one very special comparative advantage, isn't it? It has ports, it's by coastline, with potential for 1 or 2 deep sea ports in Burutu, for example, Cocoa and the rest of them. So if you combine that with the fact that it can export its goods very much more easily than other parts, that gives it another comparative advantage. Third thing, it has the sectors that can power industrialization. It's good fertile soils for agro-allied industries. It has some solid minerals that can help it, like kaolin and others, to power brick and glass industry. And it can also develop a blue economy. Nigeria imports about $866 million worth of seafood, almost $1 billion every year. Delta State can develop its blue economy such that it powers Nigeria's fish consumption rather than spending that money outside. And it can also become a marine logistics hub for ship repair. It needs to deepen the seaports to be able to do that. So I've given you all the reasons, and all of these things, the objective should be to create good jobs for young people. It's not development for development's sake, but to go to sectors that can create good jobs for our young people. We want them to stay in Nigeria. We don't want them in the Mediterranean trying to go anywhere else.
That's just Delta State, the potential there and what the country could save in foreign exchange, coming right there from the WTO DG. Well, still from that summit, Delta State's campaign to position itself as a preferred investment destination seems to be gathering stronger backing. Industry leaders who attended the event, they identified dependable electricity and effective public-private collaboration as critical drivers of sustainable industrial expansion. The chairman of Transcorp Power Holdings, Mr. Tony Lumelu, reaffirmed the company's commitment to supporting the state's industrial ambitions through reliable power supply, describing stable electricity as essential for boosting manufacturing, creating employment, and accelerating economic growth. And also, right after him, the chairman and chief executive officer of Mosra Energy, Mr. Olukayode Ramos, he underscored the importance of stronger public-private partnership, noting that the sustained collaboration between government and the private sector remains vital to unlocking the state's full industrial and investment potential.
Delta is very safe for investment, hospitable, and very receptive to people. As a group, our group, one of the things we do in our group, we're into power generation and power distribution. Everything we discuss here needs to be powered. We need to provide electricity to make sure it works. In Delta State, we have a 1,000 installed electricity generating capacity at Wheelie. They call Transcorp Power Wheelie. Unfortunately, we do about 500 megawatts a day because of some constrained gas issues and evacuation issues. But, Mr. Governor, we would like to discuss with you to see how we can help or partner with you with Delta State to make electricity generation and distribution to the last home in Delta State affordable and possible. I believe that will help us to truly create employment, alleviate poverty, and industrialize our state. So that will be our group's contribution to what you're doing here. Thank you for what you're doing there.
Our partnership with the Delta State government to develop 600 megawatts mine-mouth power plant in Obonkpa and the proposed energy and industrial special economic zone in Aniocha is a demonstration of what is possible when government and private enterprise work together with a shared vision. But our ambition goes far beyond building a power plant. Let me put this into perspective. 200 million tons of proven coal reserve in Delta State is not just a geology. It represents over 30 years of continuous, guaranteed baseload power. That is enough continuous electricity to fuel industrial manufacturing. Manufacturing, technology hubs, and processing plants right here in Delta soil without interruption. We are not just lighting up a grid. Under the MORE agenda, we are anchoring West Africa's next industrial powers.
So it was a busy, and of course the summit continues today. But let's head to the commodities space now and see what's happening, especially with the response from Iran that there's no talks or plan of talks at this time concerning the war going on in Iran between Israel. And we have joining us for this manager research at Financial Derivatives Company, Dumebi Oluwole. Hi, Dumebi, good morning. Good to have you on the program.
Good morning. Thank you for having me.
Yeah, so a lot of uncertainties there. Mr. Trump saying that the talks are on, that's why he is held off the strike that they had planned. But on the other hand, Iran is saying no talks at all. So that leaves the world in the middle, in quagmire.
I mean, it's really what a lot of analysts like myself have been expecting over the last couple of months. The moment we saw the re-escalation and how tensions have brewed between both countries, it was very obvious that what we're seeing on the news is very different from what's happening behind closed doors. And the disconnect between both countries and the information that's put out there, of course, is rattling the markets. Today, we see oil prices significantly rising, and tomorrow we see oil prices plunging. And stock markets are also following the trend of what we are seeing as people are trying to, as investors really are trying to, take safer bets and more importantly, rotate their portfolio to kind of hedge against what exactly is going on. The talks that are actually happening are between Iran and Oman, and that's because they share a small passageway, not the Strait of Hormuz, but just a small passageway that ships could actually follow. And that conversation between Iran and Oman seems to be, moving forward. And if that proceeds, the markets are obviously pricing in a possible expansion or some movement of ships, out of the Strait of Hormuz towards that small passageway. And if that, of course, happens, we might see the market somewhat react with oil prices somewhat, falling. However, the tensions really and uncertainty between the US and Iran, and to some extent Israel, right now, we expect that the markets would definitely over-index on that, and that's really where the case lies right now.
Sometime last week, Saudi Arabia offered a bit of hope. I think there was an alternative plan by Saudi to allow ships pass through perhaps another passage. I wonder if you've heard of any updates on that.
Not necessarily. I think the conversations have really been between that strait between Iran and Oman, simply because that's closer to the Strait of Hormuz and it's easier for ships to route through that passageway. The conversation that I know about where Saudi Arabia really is involving itself is in form of diplomatic conversations between Iran and the US. Earlier in the week, we did hear of the Prince of Saudi Arabia speaking with Donald Trump to kind of, reduce the tensions, simply because if further airstrikes happen between US and Iran, where Donald Trump has outrightly said that he will attack civilian infrastructure, the Iran would definitely retaliate, and that means that Saudi Arabia could take a hit. Saudi Arabia has taken a hit, in the course of the war, and if Donald Trump, of course, pushes through with his threats, would likely see, them being at the back burner of these airstrikes, and they are trying to reduce such implications, especially for not just only them but other Gulf countries like the UAE, Qatar, and Kuwait, who have also received some fair share of blows this period.
Yeah, maybe, but I mean, the impression I'm getting now is that the US is seeking peace. Iran is, the one that's looking at the war partner, because we know even the peace talks, ceasefire they had, I think, for about 2 weeks, it was Iran that started the first strike or re-strike. So does it look like Iran perhaps has held or found a weak point of the US and they're deciding to milk it? Would that be a correct assessment of the situation?
Actually, I would say no. Reason being that in the geopolitical tension between the US and Iran, it's not something that started today. It's a bigger issue that is between, the US and the Middle East, and how much of, havoc and issues that the US coinciding with Israel has caused in that region. Iran sits at a very intrinsic point in the war today. What they are asking for is, number one, sanctions be lifted off their oil so they are able to sell internationally. They are also asking that some of their assets that have been frozen be released to them. They've also asked that, the extension of Israel towards Pakistan is somewhat reduced, and that eases some tension within the Middle Eastern region. So there are a lot more issues, between the US, Israel, and Iran that, somewhat is buried in the news of airstrikes that is not exactly out there. If you look through the memorandum of understanding that they had before the re-escalation, you would see that even the news did put it, and I think I spoke about it here, that not everything the US is asking for Iran will be able to give, and not everything Iran is asking for the US would want to give because of their ties with Israel. And I think that brings Iran and of course the US between a rock and a hard place. And I guess the geopolitical tensions, remember I mentioned, it's more historical than just what exactly we're seeing on the surface. So Iran, of course, is fighting for its sovereignty. It's fighting for not just itself, but also the Middle Eastern region, where smaller countries like Libya, Lebanon, Jordan, that have been affected by, the Israeli extension and, of course, its alliance with the US, it's, of course, fighting not just for itself, but the other countries. And I think that when we look at it through that lens, you will see that if they extensively agree to what the US is asking for, they will definitely not benefit from it. And I guess that's their current stance.
Well, all of this will drive back home energy costs, among other things.
Of course. And again, I think it boils down to the fact that as, developing countries, just like what, our WTO director was saying, that the comparative advantage that you have as a country is where really your power lies. And I think with this situation, we're seeing other emerging markets, of course, play their marks in resources that they have comparative advantage in to generate more revenue. We're seeing this happen with Burkina Faso. We're seeing this happen with Mali and cotton. Burkina Faso with gold and other industrial resources that they have. The DR Congo is also doing this with some lithium. Morocco is doing the same thing. I think Nigeria also needs to come to the table with that. While we see that, energy, the spike in energy prices is affecting the domestic market, it is not necessarily a situation that was wrought by the war, in my opinion. There have been other issues, that have led to Nigeria being in the situation it is today. Our inefficiencies, our lack of refinery infrastructure, we wrought this havoc on ourselves. And I think it's important that we really focus on that issue rather than the imported cost or the imported vulnerabilities that we brought that has been brought on Nigeria as a result of the war. Other countries have been edged.
Yeah, so I mean, the conversation still goes round to adding value.
Yes.
What you said, the WTO DG talked about. We have these potentials. We have the brains. We have the human resources. We have the natural resources, and yet we are getting peanuts for it because value is not being added. I guess more intentionality beyond the summits and the talks, that we would normally have. I guess that's the intentionality that Africa, not even just Nigeria, needs to focus on at this time.
Yes, you're very right. I think that the more we put these conversations on the back burner, the more exposed we are to external shocks. Nigeria still stands as one of the most resource-rich countries in the world. We have agricultural resources, we have mineral resources, and the fact that consistent conversations around, Nigeria's development, commodity prices escalating is still very much, at the front burner of our conversations. It's very disheartening and disappointing, if I must add. And I think that not until we begin to see more conscious implementation towards alleviating these macroeconomic issues that Nigeria experiences today, I guess we'll keep having this conversation. And my 2 cents on how we can have this growth inclusive is essentially making sure that states and pretty much subnationals, focus on resources that they have comparative advantage in. And listening to, the Delta State conversation it's something that I do believe that if other states, adopt, which I'm beginning to see a lot more happen, around, I think it would definitely uplift the model, reduce some of the responsibility on the federal government, and more importantly apply pressure on the states to improve their own revenue, add more resources, and more importantly institutionalize special economic zones to keep attracting long-term private capital. The moment we see all of this trickling in, the story of China, Malaysia in some resources, I think that we would definitely see that happen in Nigeria.
Yeah, of course, we hope that one day they will cite Nigeria and say, oh, the story of Nigeria coming from under there to on top there. And that will make, us proud, to carry the green passport. But thank you so much for joining on the program this morning. Dumibiolu Ole, Research Manager at Financial Derivatives Company. Thank you.
Thank you for having me.
Let's take a break. When we come back, our insurance sector, they had, of course, their recapitalization. The deadline was on Friday. Let's hear what the regulator has to say. After that, we know they've already told us 43 companies made it through. 8 of them are in the waiting. We'll get the update after this break. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. So the regulator, NICOM, they did release the statement yesterday informing us that 43 insurance companies have scaled through the recapitalization exercise successfully. 8 submitted their requirements late, and so they're still on the consideration. However, this is the new strength the financial strength of insurance companies. So we see Nigeria's financial sector at the new capital threshold. Non-life has a threshold of 25 billion naira, life 15 billion, composite, which is like a combination of both, 40 billion, and reinsurance 75 billion. So the regulator joins us this morning. We have the Commissioner for Insurance and Chief Executive, National Insurance Commission, Mr. Olusegun Omosoyin, joins us from our Abuja studio. Congratulations, sir, on this successful recapitalization. More money now in your sector.
Thank you very much. Good morning. Thank you for having me.
So 43 companies okay, please go ahead.
Yeah, I think this is indeed happy times for the insurance sector. We've never had it this good. The last recapitalization in the sector was about 20 years ago. So to a large extent, we're happy we are witnessing this. Coupled with the sort of interest we've generated from investors in the market, both in the capital market and even during private placement. So we've seen a great interest from investors and even interest from the general public. So we're quite excited as to the kind of times we're in.
Yeah, so I mean the statements you released yesterday also informed us that there are 8 companies pending. What's the status now?
All right, so we cleared the 43 that had met the minimum capital requirement as of the deadline. However, we had a situation where a few companies, 8 of them in number, had submitted all the requirements, but because they submitted slightly before the deadline, the Commission never had the opportunity of properly reviewing a proper regulatory review of those submissions. So the position is we've given 14 days within which to clear those late, or I wouldn't say late, almost at the nick of time submissions, and then we'll be able to announce the final result of the entities that finally crossed the line. But that is to give assurance to even the investors that have put their monies or their capital into those entities, that there's nothing to worry about because the process will be finalized in the next 13 days now. We said 14 days as at yesterday, but it's actually 13 days now as from today.
Okay, 13 days. And so did we have mergers, consolidation in the process even before now, or do we expect maybe from this remaining 8?
Interesting question. We saw a slightly different scenario playing out. Even to us as regulators, we are pleasantly surprised as to the level of capital that was raised by entities in the market. At the time the recapitalization exercise was pronounced, we were hoping to see a lot of mergers, acquisitions, and what have you. But I think the insurance sector has moved to a new level where interest of investors in the sector is at its peak, really, because almost all the entities that went to the market to raise capital raised substantial amount of capital. And so we have not seen mergers in the 43 that we have cleared. Rather, what we've seen is new investors taking positions in most of these entities. We've seen situations where some of them have changed ownership by way of bigger groups taking majority position in those entities, perhaps because of their own strategy of playing bigger in the insurance sector. We've seen situations where even existing entities, existing investors have increased their stake, in those entities. There's only one merger that is in the making, which is among the remaining 8. But we'll see how that plays out if at the end of the exercise we are able to finalize on that. But above all, the encouraging word from us as regulators is the fact that the exercise, even as it is more than successful. It's recorded, one of its best, the first in the sector. And as regulators, we're quite happy with.
Yeah, Mr. Omotoye, I can hear the joy in your voice. Every word comes out with a smile, and I'm happy with you too. But to whom much is given, much is expected. So, what can we expect from this new money that you have?
Thank you. That's a great question, because there was an objective behind the recapitalization. This wasn't just an exercise for the sake of it. So what we expect to see from the recapitalization is to see enlarged capacity of underwriters, insurers in Nigeria. And what do I mean? We want to see insurers that are able to take on bigger risk, by so doing enable bigger projects, particularly in critical sectors like energy, manufacturing, agriculture, what have you. And these are essentially how we can create value for the Nigerian economy. What happened in this regard also is because you now have entities with, bigger balance sheets, they are then able to retain more risk locally rather than, reinsuring the bulk of them offshore. So this will, these are retention of risk domestically will then create opportunities for the Nigerian economy, more employment. They are then able also to invest some of these funds in long-term bonds and projects, that can infrastructure projects that will help the economy. So beyond this, also we are going to be seeing, an insurance sector that could provide the economic stability that is required for an emerging economy like Nigeria. What does this mean? They'll provide the shock absorber that is required, for businesses, for households, and for investment. Particularly when we are looking at the $1 trillion economic ambition of the current government. So this needs to be protected. The necessary resilience that is required for an economy that, aspires, to be that strong and solid needs to be provided by a vibrant insurance sector. And this is what this recapitalization is providing to the Nigerian economy and to the Nigerian people.
Honestly, sir, I love the sound of infrastructure, because one can only imagine what the country loses because of inadequate developed infrastructure. And also last year, we did see the NGX, the Nigerian local boss, move drastically positively because of pension funds. So, I mean, if we see a lot of activity from the insurance sector in the area of infrastructure and in the market, I'm sure a lot of Nigerians would actually really appreciate that.
A strong balance sheet enables, underwriters to mobilize long-term funds, investment savings that are required to finance infrastructure. And this is the role we should be playing in the economy. Yes, have we done enough of this in the past? We should just look ahead and look at what we are creating with the reform. So part of the objectives of this reform is to ensure that insurance comes to the table, comes to the party, right? And this is what the recapitalization exercise that has just been concluded would, add to the conversation, right? Where underwriters are then able, to generate and accumulate long-term savings, which would then be invested to finance, infrastructure. With the huge gap that we have, I can assure you, these are clearly the advantages, the obvious advantages that our nation, Nigeria, will benefit from.
Yeah, and we're looking forward to it. And then, I mean, also, you did mention in this process of recap, it seems a lot of investors or more Nigerians now have confidence? Because if not, they won't put their funds in there. Because sometimes insurance is treated as, an enemy, because mostly car owners are compelled to do the third party. So it's like you don't see people voluntarily embracing insurance in their investments or in their daily lives and everything. So I'm sure that you're working with your stakeholders to change this perception and get more Nigerians on board.
Yes, more of perception than reality. The fact that some Nigerians felt they cannot derive value, from insurance. I think it's more of lack of enough education. And this is not necessarily the fault of the public. Perhaps even as a sector, we've not done enough. But to give the assurances, what a vibrant and properly regulated insurance sector will provide is the assurances that all policyholders that have invested or have taken their time to take up protection in insurance should be protected. Yes, have there been issues of lack of public confidence in the sector in the past? The answer is yes. And those are questions we are answering and we are addressing with the recapitalization. More so, we should remember that this is a sector that is properly regulated now. So the regulator is there to protect the policyholders. So we are giving the comfort and the assurances to policyholders that the insurance sector of today is where you should, where you should come to for the necessary protection. Be it your day-to-day businesses as an SME, your risk as relates to even your livelihood, your assets and what have you. All of that are what you should seek proper protection, particularly in an inflationary environment where cost of replacement becomes, a bit difficult if the unfortunate event happens. But above all is the fact that those narratives are fast changing. And I'm today saying this openly, to all Nigerians, that look, let's know if you have a story of where insurance have not paid your claims, right? It shouldn't just be by word of mouth. Let's have those facts. And as National Insurance Commission, it is indeed our role to ensure that that is adequately taken care of. So back to the issue of, sorry.
No, go ahead, sir. Conclude your thoughts.
So back to the issue of recapitalization. So one of the key elements or advantages we want to see is for the process of claim settlement to even be faster. So we want to see faster payment of claims because entities are now better capitalized. They are more liquid. So the turnaround time should actually, be to the advantage of the Nigerian people. So we want to see shorter turnaround time for claims processing of all genuine claims, and Nigerians should be able to get the benefit of a capitalized and more reliable and stable insurance sector.
I really like the challenge you threw out there. Any Nigerian who has proof that their claim has not been paid, they can reach out. And I'm here. I'll pass the message to you, and I'll follow up. In conclusion, Mr. Monsey, looking ahead, 3 to 5 years from now, what are some indicators, some pointers that we can expect to see to show that, well, this recap did not just end with bringing money to the sector, but is actually achieving the intended objective, especially when we look at our target of $1 trillion economy?
Thank you. Well, one of the there are several indicators we could look at, but one of the key ones I'll point to. One is the penetration rate, i.e., how the level of adoption of insurance in Nigeria, or the rate of, when you compare the rate of insurance adoption and you look at the contribution of insurance to our GDP, it will be a good measure. The second one also will be in terms of the performance of the sector. And that can be taken even from the investor's perspective. We would like to see how insurance will be performing at the capital market, for example. How are investors pricing insurance? Is it still a penny stock, or indeed it has moved to proper naira stock, which we are seeing? Even though we've seen movement, but we want to be very sure and certain that these are not just once in a while kind of event. We want to see that genuinely the sector has moved. But more importantly is the economic guaranteeing the stability of our nation, Nigeria. We want to see an insurance sector that can properly be positioned to provide the necessary resilience that an economy like ours requires. No nation on the planet, can really prosper or be progressive if the necessary resilience that's required by the insurance sector is not there. So we want our insurance sector to really grow to that point where they can provide all the necessary support that economy in Nigeria requires. It's at that point that we will say, indeed, the recapitalization exercise has delivered its dividend. And this is very important because recapitalization on its own is not just sufficient. It's the foundation that enables us to build, the necessary blocks that can, deliver the sort of very stable and reliable insurance sector. And that we have started. And I'm happy with the progress we are making. The building blocks, are fitting in. And we are seeing a transformation project that is delivering on the set objectives. We are happy to fast track because the nation also is in a hurry to turn around our situation, and insurance is prepared to be an integral part of this. Thank you.
And we are looking forward to that impact. Thank you so much. And once again, congratulations to you, Commissioner for Insurance, Chief Executive, National Insurance Commission, Mr. Olusegun Omosayin. Congratulations and have a good day.
Thank you very much.
Just before we go global now, the NICE conference has finally been held. That's the Society of Petroleum Engineers. They had their conference and they had some talks about expanding horizon and collaboration within the continent and among stakeholders in the energy sector.
The chairman, Society of Petroleum Engineers Nigeria Council, Engineer Francis Nwoche, welcomes guests and members to the much-anticipated Nigeria Annual International Conference and Exhibition for 2026. The theme, Thriving in the Evolving Global Energy Landscape, Collaborative Growth and Resilience, is generally agreeable to participants considering global realities.
So, Society of Petroleum Engineers, we are focused on oil and gas. That is absolutely our core. But as we look at energy, we also look at what are we really good at. And we're very good at fluid flow and porous media. And over time, we are a member-driven society. Our members have said, these are the things that we want to focus on. We want to focus on oil and gas, but we're also interested in CCS and emissions control. How do we thrive in an evolving global landscape? How do we collaborate? How do we grow and become resilient? We do it together, and we do it through technology transfer opportunities like SPEI International helps with, but also conferences like this help with.
For Nigeria, the implication is very clear. If we want to compete in data centers, fintech, industrial automation, digital services, AI-enabled enterprise, we must expand electricity supply, deepen gas to power, strengthen transmission, integrate renewable where they are commercial and technically viable. For Africa, we have enormous opportunity. We have the resources, young population, growing cities, large energy deficits, and industrial ambition.
One of the regulators in the oil and gas space, the Nigerian Midstream and Downstream Petroleum Regulatory Authority, NMDPRA, shares its consciousness of the fast-paced change globally.
how we can actually turn Nigeria into a trading hub. Working with other West African regulators, how do we have one single standard, or if you like, specification for all the products that we consume? That way, you have the product to be more fungible. People can move products from one region to another without the constraint. Today you hear 50 ppm, somewhere it's 200 ppm, and all sorts of other parameters that are different.
Ultimately, the conference believes that across the world, energy systems are being reshaped by the urgent need for energy security, affordability, as well as sustainability. And so countries as well as companies have to do more to supply reliable energy today, reduce emissions, attract capital, deploy technology, and prepare for a lower carbon future.
All right, let's get a check on the global economy now. We see artificial intelligence continues to reshape the technology landscape, and one of its biggest beneficiaries has delivered another blockbuster quarter. U.S. software giant Palantir Technologies posted a 93% jump in second quarter revenue. That's at $1.94 billion. Revenue growth 93% year-on-year higher. Adjusted earnings per share, that's at 41 cents. EPS estimate was 34 cents. Net income $1.06 billion. Operating margin 56% higher. Then we see their free cash flow there at $1.22 billion. So that's the latest one for Palantir. They're smashing expectations from Wall Street. It also raised its full year revenue forecast as much as $8.16 billion. The strong performance that was driven by surging commercial and government demand in the United States, sending the stock sharply higher in after-hours trading and reinforcing investor confidence in the AI investment story. We know investors are watching out for the AI spend there. Then they updated their 2026 guidance, moving revenue to between $8.15 billion to $8.16 billion. Adjusted operating income $4.89 to about $4.90 billion. Adjusted free cash flow about $4.5 to $4.7 billion. So when the next earnings come out, they should match this to smash expectations again. All right, let's look at how the big investors, what they're doing now. Kathy Wood's ARK Invest is making another notable shift in its technology portfolio. We see the investment firm sold shares of gaming platform Roblox while increasing its position in Amazon, purchasing more than 73,800 shares worth about $20 million. ARK also added to its holding in AI cloud provider CoreWeave and cryptocurrency exchange Coinbase, underscoring its continued conviction in artificial intelligence and digital assets. The latest portfolio moves come as investors closely monitor the firm's positioning following a strong rally in major technology stocks. We see the U.S. government is preparing to borrow more than previously expected, highlighting mounting fiscal funding needs. The U.S. Treasury has raised its third quarter borrowing estimate to $739 billion, up about $68 billion from its May forecast. Citing weaker than expected cash flows, the Treasury expects to end September with a cash balance of $950 billion, while fourth quarter borrowing is projected at $628 billion. Investors are now awaiting the Treasury's quarterly refunding announcement, which could provide fresh clues on the outlook for U.S. bond issuance and borrowing costs. And for the pizza lovers there, pizza demand proved resilient in the first half of the year as Domino's Pizza Group delivered a stronger sales and profit, helped by soccer, the World Cup, and successful new product launches. The company reported a 3.6% rise in underlying core profit to $66.2 million. Profit growth there up by 3.6% year-on-year. Revenue growth 6.7% higher. System sales growth, that's about 6.1% up year-on-year. Like-for-like sales, that's 4.9% higher. Order growth, just about 1.6%. Year-on-year. So that's another good one there, beating expectations. That's for Domino's Pizza. Let's look at the automobile industry now. See, Toyota, they reported a mixed start to its new financial year, with quarterly operating profit declining as geopolitical tension and higher costs that weighed on performance. The Japanese automaker posted first quarter operating income of 1.06 trillion yen. See revenue there at 13.52 trillion. Revenue growth, that's about 10.4% higher. And we see the operating income there, 1.06 trillion. Let's look at guidance for the rest of the calendar year now. They did put out guidance there. So sales revenue, they're looking at about 54 trillion yen. Previous forecast was 51 trillion. So that's an upgrade there to 54 trillion. Operating income, 3.4 trillion yen. And we see previous forecast at 3 trillion. So we see an upgrade there for guidance from this auto maker. All right, let's look at other matters now. Germany's Lufthansa, they've cut their 2026 profit outlook after soaring fuel costs and strike-related disruptions sharply reduced second quarter earnings. The airline reported adjusted operating profit of 383 million euros, down from 870 million euros a year earlier, despite continued strong travel demand. Lufthansa now expects full-year adjusted EBIT of between 1.7 billion to 2.2 billion euros, warning that fuel price volatility and rising operating costs will continue to weigh on performance. And Italy recorded a 13.4 billion euro budget surplus in July, supported by a seasonal surge in tax collections, according to the country's treasury. While the surplus was slightly lower than the 14.1 billion euros recorded a year earlier, it reflects the annual boost from mid-year tax payment deadlines. Italy typically posts budget deficits for most other months, making July one of the strongest periods for government finances. And we see India's government is pressing ahead with a major stake sale in Life Insurance Corporation, offering shares at an 11% discount to the previous closing price in a bid to boost public ownership. The offer for sale could raise up to 314 billion rupees, or about $3.3 billion, making it one of the country's largest equity sales in recent years. The move is aimed at helping LIC meet regulatory minimum public shareholding requirements by May 2027, while advancing the government's broader investments program. And those are the top stories for the global economy. It's back to Rini.
Thank you so much, Ladi. And just before we head out of the studio, take you to the market and see that we have sustained that green color from yesterday, even though it's very risky because it's just 0.02% up in early trade at the NGX, 245,796.42. That's the all share. First Oko is still in the green, gained 2.69% already. Airtel Africa is also positive this morning, almost 10% in the green, and so is Triple G, UH Rate, and Cadbury. Of course, we have profit taking also still going. Veritas Capital is experiencing that. Nimeth is also experiencing that. Presco is still down there, lost 10%. Alrighty, latest numbers will come your way at 1:30. Ladi Williams will be back for Business Incorporated. I'm John McQuan. I'm wishing you the very best of the rest of the day. Bye-bye.